In today's top story, the cryptocurrency market experiences dramatic shifts as Bitcoin surpasses $80,000. Additionally, regulatory changes loom over the industry. Here are today's top 10 stories you need to know. Innovations in blockchain technology are reshaping various industries, demonstrating its potential beyond cryptocurrencies. Recent developments in supply chain management, healthcare, and finance are showcasing the versatility of blockchain applications. Companies are exploring how decentralized ledgers can enhance transparency, security, and efficiency in their operations. For instance, blockchain is being utilized to track products in supply chains, ensuring authenticity and reducing fraud. In healthcare, patient data management is being revolutionized with blockchain solutions that prioritize privacy and security. As these innovations continue to emerge, they are attracting attention from investors and industry leaders. The potential for blockchain technology to disrupt traditional business models is immense. Looking to the future, the continued evolution of blockchain applications could lead to significant changes across sectors, emphasizing the importance of staying updated with technological advancements. Global adoption of cryptocurrency continues to rise, with more individuals and businesses recognizing its potential. Recent surveys indicate that a significant percentage of consumers are now familiar with digital currencies and are considering their use for transactions. This growing acceptance is driven by increased education and awareness about cryptocurrencies, fueled by social media and online platforms. Additionally, major companies are integrating digital currencies into their payment systems, signaling a fundamental shift in commerce. As more countries explore the regulatory landscape, clearer guidelines for cryptocurrency use are emerging, which could enhance consumer trust. This trend could lead to a more mainstream acceptance of cryptocurrencies in everyday transactions. Looking ahead, the continued rise in global adoption may pave the way for innovations in payment systems and financial technology, potentially transforming how we conduct business and manage personal finances in the near future. Cryptocurrency mining is facing increased scrutiny regarding its environmental impact. As Bitcoin and other cryptocurrencies gain popularity, concerns about energy consumption and carbon footprints are intensifying. Environmentalists are calling for more sustainable mining practices, urging the industry to explore renewable energy sources. Some mining operations are beginning to shift towards greener alternatives, but challenges remain in balancing profitability with sustainability. The conversation around environmental responsibility in crypto mining is becoming more prominent, with stakeholders advocating for a collective effort to reduce the sector's carbon footprint. As the debate continues, regulators may impose stricter guidelines on mining activities. The future of cryptocurrency mining could hinge on the industry's ability to adapt to these environmental pressures. Looking forward, the transition to sustainable practices may not only protect the environment, but could also enhance the legitimacy of cryptocurrencies in the eyes of the public. The non-fungible token (NFT) market is showing signs of recovery after a significant downturn that began in early 2022. Recent sales data indicates a resurgence in interest, with several high-profile NFT auctions attracting substantial bids, rekindling enthusiasm among collectors and investors. This uptick is attributed to a renewed focus on digital art and collectibles, as well as strategic partnerships between artists and established brands. Market analysts suggest that this recovery could signal the beginning of a new phase for NFTs, characterized by increased utility and integration across various industries, such as gaming and real estate. As the market evolves, stakeholders are encouraged to explore innovative use cases for NFTs beyond mere digital art, such as in ticketing and identity verification. The potential for NFTs to revolutionize ownership and provenance in various sectors remains a topic of keen interest. Looking ahead, continued growth in the NFT space could lead to transformative developments, particularly in how we perceive and interact with digital assets. Decentralized finance, or DeFi, platforms are experiencing a remarkable surge in user activity, as an increasing number of investors seek alternatives to traditional financial systems. Recent data reveals a significant jump in transactions across popular DeFi applications, showcasing a growing preference for peer-to-peer financial services. This movement is largely driven by a desire for greater transparency, lower fees, and the potential for higher yields compared to conventional banks. As more users flock to these platforms, developers are racing to enhance security measures and improve user experience, addressing concerns surrounding hacks and vulnerabilities. However, this rapid growth also raises important questions about potential regulatory challenges and the long-term sustainability of DeFi ecosystems. Stakeholders, including investors and regulators, are urged to stay informed about the evolving landscape, as the rise of DeFi could significantly reshape the future of finance. Looking ahead, industry experts predict that continued innovation in DeFi platforms, such as improved interoperability and user-friendly interfaces, will attract even more users, further propelling growth in this dynamic sector. Institutional investors are increasingly entering the cryptocurrency space, significantly contributing to the market's rapid growth. Recent reports indicate that hedge funds and asset managers are allocating a substantial portion of their portfolios to digital assets, viewing them as a hedge against inflation and a source of potential high returns. This trend is driven by the increasing acceptance of cryptocurrencies as a legitimate asset class, with major financial institutions developing innovative cryptocurrency products to meet the growing demand from their clients. As institutional involvement in the crypto market rises, it is expected to bring increased legitimacy and stability to the sector, attracting more retail investors. However, traditional investors are advised to conduct thorough research, as the market remains highly volatile and prone to sudden fluctuations. The entry of institutional players could also lead to enhanced regulatory scrutiny, prompting discussions about best practices for managing digital assets. Looking ahead, industry experts believe that the continued influx of institutional capital could pave the way for broader integration of cryptocurrencies into mainstream financial systems, transforming investment landscapes significantly. The cryptocurrency market is experiencing a notable shift in investor sentiment as volatility persists, marked by significant price swings in recent weeks. This turbulence has prompted many traders to adopt a more cautious approach, reflecting broader concerns about regulatory changes and macroeconomic factors affecting the market. Market analysts report that fear and uncertainty are driving many investors to reassess their strategies, with a noticeable increase in demand for stablecoins as a means to mitigate risk during these unpredictable times. Furthermore, social media platforms are abuzz with discussions about market trends, with sentiment analysis tools indicating a growing concern among crypto enthusiasts regarding potential losses. Despite the prevailing uncertainty, some analysts maintain an optimistic outlook, suggesting that volatility often presents unique opportunities for savvy traders who can navigate the complexities of the market. As participants grapple with these turbulent waters, they are advised to stay informed and remain agile in adapting their strategies. The coming weeks will be critical in determining whether this cautious sentiment solidifies into a more stable market or exacerbates price fluctuations. Ethereum is on the brink of completing its transition to a proof-of-stake consensus mechanism, a change that could significantly impact the network's efficiency and environmental footprint. This transition, known as Ethereum 2.0, aims to address long-standing criticisms regarding the energy consumption associated with proof-of-work systems, which have faced backlash for their carbon emissions. By allowing users to validate transactions based on the number of coins they hold, Ethereum hopes to reduce its energy consumption by over 99%, making it one of the most eco-friendly blockchain networks. This shift has already attracted considerable attention from both developers and investors, with many viewing it as a pivotal moment for the platform. As Ethereum prepares for this significant overhaul, experts are closely monitoring its implications for decentralized finance, DeFi platforms, and NFT marketplaces that heavily rely on the network. The successful implementation of this transition could set a new standard for blockchain networks, influencing other cryptocurrencies to follow suit. Stakeholders are optimistic about the benefits this upgrade will bring, but they remain cautious about possible challenges during the transition period. especially regarding network stability and security. New regulatory changes are poised to significantly impact the cryptocurrency market. As governments worldwide intensify their scrutiny of digital assets, they aim to create a more structured environment for trading and investing. This regulatory shift arises from growing concerns about market volatility, fraud, and the potential for money laundering. In the United States, the Securities and Exchange Commission is contemplating stricter guidelines for cryptocurrency exchanges, which could redefine how these platforms operate. Similarly, in the European Union, policymakers are advocating for comprehensive legislation to govern digital currencies, reflecting a broader global trend. While some investors view regulation as a means to enhance market stability and legitimacy, others worry that it could stifle innovation and limit the growth of new technologies in the sector. The ripple effects of these regulatory changes could reshape the landscape of cryptocurrency investment, potentially leading to a more cautious approach among investors. As discussions progress, market participants must adapt to the evolving regulatory environment. Stakeholders should prepare for a period of adjustment as these new rules are implemented. The future of cryptocurrency will hinge on how effectively these regulations balance investor protection with the need for innovation in this rapidly changing financial landscape. In a significant development, Bitcoin has surged past the $80,000 mark, marking a remarkable 30% increase since February. This resurgence is attributed to growing institutional interest, with major financial institutions increasingly adopting cryptocurrencies as part of their asset management strategies. Positive market sentiment is also driving this rally, as retail investors are drawn to Bitcoin's potential for high returns. Analysts suggest that this price surge could be fueled by macroeconomic factors, including rising inflation concerns and a weakening dollar, which have historically led investors to seek alternative assets. As Bitcoin continues to gain traction, experts are closely monitoring for potential price corrections that could follow such rapid gains. This milestone has rekindled discussions around the cryptocurrency's role as a digital gold, a safe haven in times of economic uncertainty. The implications of this price movement extend beyond investor portfolios, signaling a potential shift in how cryptocurrencies are perceived globally, especially in the context of mainstream finance. As we look ahead, many are questioning whether this upward trend can be sustained amidst looming regulatory changes and market adjustments. The coming weeks will be crucial for both Bitcoin and the broader cryptocurrency market, particularly as investors await key announcements from regulatory bodies that could shape the future landscape of digital currencies. Thank you for watching. Which story surprised you the most? Let us know in the comments below, and don't forget to like and subscribe for more updates.